Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Niv Dagan, who's the founder and executive director of Peak Asset Management, who are a boutique investment management and corporate advisory firm with offices in Melbourne and Vancouver. Their entire principle is built on the co-invest model. So they only put opportunities in front of their clients that they are personally willing to back their own capital in. Niv has a background in capital markets, broking, hedge funds. It's going to talk to us a little bit about obviously what the company does, but also give us an overview of what's happening in the financial markets within the mining and resources space. And speaking to many people, it seems that it's a little bit difficult out there at the moment, and hopefully Niv can shed some light on what is actually happening, so we can obviously unpack that. So that's welcome Niv to the podcast. How you doing, Niv?
Yeah, thanks for having us, Rob.
Appreciate your time as well. So wondered if you can just tell us a little bit about your background, your career, what you've been doing in the past. As I mentioned, you've been in a variety of different spaces within the financial markets. And then obviously we can speak about Peak Asset and some other questions around what's happening in our financial markets.
Yeah, Rob. So my background's more institutional. I started my career at Macquarie Bank in Melbourne, more on the institutional side of the business. So we were predominantly working with fund managers, asset managers, large groups of clients. And before the GFC, we were tailed as the millionaires factory. I still remember Macquarie had essentially their Christmas party out in Sydney, and they got quite a lot of slack for it. They spent over $1 million inviting the presets on an island, and it was a lot of fun for a young guy coming through. The GFC hit, got a quite wide awakening of essentially what it was like to be in terms of the fund management on the other side, and some of our clients did have huge liquidations during that period. So it was quite an eye-awakening experience. I left Macquarie in 2010 to, at the age of 26, got an opportunity to run a broking firm. I thought this will be a lot of fun. Built that business for 3 years, and then that business was sold. My director left, and I said, look, what am I going to do now? And I set up Peak Asset Management. So we're 10 years old in September, Rob, and it's been a great ride. I mean, when I first set up Peak, we were doing everything from portfolio management to asset allocation to structured products to pretty much had a portal to allow investors to come through. But one of the guys that used to work for me said, look, Niv, we're doing too much. Like all businesses do, you need to focus. Why don't we focus on putting the best curated deals in front of investors that we co-invest our own capital behind? And that's really what we've been doing for the last, I'd say, 10 years. I spent a few years in North America and Canada, got back just before COVID. So it's been a great ride along the way, and obviously 10 years this year.
Yeah, congratulations as well on 10-year anniversary. And obviously you mentioned about obviously the Macquarie story. I was in Sydney at that time, and I do remember reading stuff in the media around that. So yeah, I do recall that. Anyway, moving on. Just wondering if you can just tell us a little bit about Peak Asset Management as a company and the journey that you've been on over the last 10 years.
Yeah, look, for those, I mean, in the industry, I mean, going out on your own was, got touted it was too risky. And when I set up Peak, as I mentioned before, Rob, we were doing pretty much everything. And really our job right now, and has been probably for the last 6 to 8 years, is really identifying great deal flow in front of investors that is curated, that's highly researched, that's analysed, and would only put it in front of our investors. And those investors might be your high net worth investors all the way to your small cap funds or institutionals that we co-invest alongside them. So, I always talk about the alignment among the investor and the corporate and among us, ensuring that there's pure alignment And if we think that the end investor won't make money on the deal, we just simply don't do it. And that's really the big philosophy. So we do a lot of placements. We do a lot of initial public offerings on the ASX and into Canada. We've raised nearly $1 billion for various companies. We've taken about 18 companies public on the ASX and the TSXV, CSE. We do, we're sector agnostic, Rob. So what that means, we do look at any space, any sector. Can't say you can be a lithium expert or a biotech expert or a green hydrogen expert, but through our network and through our close relationships, we've got some really, really smart people around us. So the end investor, being yourself, Rob, knows they're only going to get a deal from Peak unless we've met management, middle management, we've done a full assessment of the business, but we brought an expert in. We're happy to co-invest alongside them. And then we try to help the companies beyond capital. And I think that's really, really important for those on the podcast listening. It's not about just bringing money to the deal. It's how can you help these companies beyond capital? I think that's really important.
Yeah. Just wondering if you give us an overview of obviously the current market at the moment. Like I said, I speak to a lot of people being in recruitment, and obviously a lot of CEOs of junior miners, I would say, and they're finding it tough out there at the moment. So I just wanted to give us a perspective of the market within Australia, and then we might look at expanding upon that.
Yeah, look, I mean, there's no doubt about it. I mean, 2023 has been a really, really tricky market, especially on the small cap index. I mean, if you're an investor back in 2021, 22, everyone thought there was a little bit of a hero and it was almost too easy at one stage. And I think things have come back to normality. I mean, I think, investors are looking still for alpha. I mean, interest rates here in Australia, the Reserve Bank cash rate's around 4.1%. So your mortgage rate's around 6 to 7%. Inflation's hovering around that 7% level. So essentially, if you leave your money back in your bank account, you're essentially on negative returns or zero returns. We still believe that the Reserve Bank here in Australia probably increase interest rates another one or two times before they will have to cut. Surprisingly, the property prices have actually increased in value. I mean, there's a huge appetite here for dwellings, and we're seeing a lot of immigration into Australia. And although the interest rates are expensive, we are seeing a lot of money on the sidelines waiting to find a home. When you speak to institutions, when you speak to fund managers, they're sitting on a very, very large cash weighting. So around 40 to 50% of their portfolio would be in fixed income and cash. Having said that, investors are looking for alpha. They are looking to generate capital. They are looking to generate some returns, because leaving money in a term deposit or a fixed income security, you're essentially getting zero interest or returns on. So market, Rob, has been absolutely tricky, everyone that we speak to across the board. But when you are speaking to your retail investors, they're becoming a really, really strong factor in influencing liquidity down here, because the institutions are a little bit, as I said, a little bit more complacent about how they allocate their capital. And they used to invest in that sub 50, 100, 200 million enterprise value companies. Now it's probably closer to 3, 4, 500 million market cap. So it just gives stronger power for that retail investor to invest. And really what we're seeing across the board through our investors is there is a bigger appetite to take risks down in Australia, especially on the mining, commodity, oil and gas, biotechs across the board.
Yeah, I was just about to say, what is the appetite for investing in the mining industry compared to some of the other industries? Obviously, mining in Australia is probably your number one industry. Do you think it's taken a bit of a knock recently, or is there still strong appetite for the mining industry?
Yeah, Rob, so I used to live in Canada for 2 years. I mean, it's interesting with Canada. I mean, you speak to the Canadians and the fund managers there, they're finding it really, really tough. In Australia, at least there's liquidity and there's interest. And it's interesting. I mean, there's a big appetite in lithium. There's a big appetite in rare earths. And also there's a big appetite still in precious metals and critical metals. And I mean, I don't know if it's sort of the reliance on sort of, China and Asia and moving away and into Australia as sort of, you'd say, as a safer zone. So we're seeing a lot of investment coming into Western Australia more specifically. Also parts into Canada, Brazil, we'll talk about that later. But to answer your question, the appetite for commodities is strong. We're seeing across the board, I mean, companies like PMET, companies like AZS, companies like GRE announcing rock chips essentially, and the stock prices are up to 1, 2, 3, 400, 500% in a very, very short amount of period. So we're still seeing that intraday movements of 100, 200% day on a back of, let's say, niobium or high grade rock chips or rare earth sentiment. So it does show you that there is still money to be deployed in those specific areas, especially those critical metals and the commodities. And I can't see that going away anytime soon.
As I mentioned, I speak to obviously a lot of CEOs for like junior miners, and they're struggling. Do you see that continuing in the shorter term, or do you think things will change for the junior miner sector where liquidity will be more available to them?
It's a really good question. I mean, look, we spoke to a company today. I won't name who they are, but we speak to companies all the time and management teams. We've actually got a peak microcap conference very, very shortly. But just to go back to your question, I mean, what we are seeing in terms of the small caps, unless you've got a project, unless you've got results, it's very, very difficult to raise capital. So we are seeing sort of small cap explorers shifting their sort of movement. Let's say if they were in gold or copper in Chile, or gold in WA, they might be looking for lithium assets in Brazil or Quebec, or rare earth tenements in the Pilbara, etc. More acquisitions, more results driven. That's all we're really seeing. So if you're a junior explorer, can you attract the bigger money on your standalone projects? The answer is probably not. But if you are looking to attract that additional capital, we're seeing companies go into a trading hole, raise money on the back of a hole, come out with an acquisition that will excite the market, and that will essentially drive value, and that will create a bit of liquidity going forward. So to answer your question, Rob, it's really results driven and acquisition focused to attract capital. That's what we're seeing down here.
Yeah, obviously you mentioned that you got an office in Vancouver. So just wondering what the TSX is like at the moment, and also comparable to the London Stock Exchange or the AIM as well. What are you seeing in those markets?
Yeah, look, the TSX and CSC. I mean, look, what I find in Australia, there's a lot more liquidity and there's a lot more interest for call it your sort of green hydrogen, biotechs, mining more specifically, which makes about 70% of the market down here. And then you'd say the oil and gas, et cetera, and exploration companies. What we're seeing, I mean, relative to Canada, for example, is Canada, my experience, is a market that is a little bit more fragmented. Obviously, companies are doing placements. You have to hold the stock usually for 4 months, and you see a big sort of push at 4 months and a day. In Australia, it's a lot more liquid from that perspective, from the capital raisers. In Australia, essentially, companies go to a trading hole. They raise their money within a 2-day period at most, 1 or 2 days. They'll come over the hole saying we've raised 3 or 5 or 10 million or $50 million. In Canada, it's progressive. So the longer the rights issues, the longer the placements, the longer that it drags out. And essentially that puts a bear on the capital markets as a whole. What I also find in Canada relative to Australia and maybe other regions is that when a company raises capital, let's say they raise $3 million, there is an expectation to put about $1 million in the ground, $1 million to pay for your working capital and wages and overheads, and $1 million goes to IRPR. In Australia, you don't necessarily have to spend that $1 million essentially to get that liquidity or interest. There's a lot more, as I said, interest with the social media, with a Facebook following, with what's going on with the ASX. I just find that I'm not trying to be biased at all, but understanding both sides of the capital markets, the Australian market or the ASX as a whole is a better market for junior explorers more specifically, and junior companies to raise capital, get liquidity, and generate more alpha, even though there's probably more capital in the North American market from, let's say, the Canadian pension funds and the US, New York, et cetera, funds. I find that there's a lot more focus on that retail investor and a bigger following across the board relative to, let's say, other global exchanges.
And what about some of these other global exchanges like the Frankfurt? Are you seeing some of the, I suppose, lesser known markets sort of developing and increasing their appetite for mining?
Yeah, it's a really good question. We actually have had a number of our portfolio companies dual list on the Frankfurt Exchange. It's quite a simple process where companies can, pay 5 or 10,000 euros, etc., for a listing. The key, what I find with everything, is really just how do you get known? I mean, there's 2,500 stocks on the ASX here. How do you? I mean, even if you had a ticker on Frankfurt, how do you promote yourself? So I think companies need to be realistic. Having an exchange or Frankfurt Exchange, paying 5 or 10,000 euros to get it, to list it, you do need a group to go out and promote you. I think that's important through roadshow, through newsletters, through awareness. We have had some success, initial success on companies like Unith, which uses AI and machine learning to develop a talking head technology, or Volt Resources, that's in the graphite anode battery space. So those type of companies, for example, are dual listed in Frankfurt. It does attract some obviously European investors, but as I was saying, going back to basics, without a presence, let's say in Europe, or companies going at least once every half a year to go out and meet with investors, institution funds, newsletters, etc. It's exactly the same. I mean, how do you get noticed? How do you get seen? And that's really, really important.
But you can do by coming on this podcast.
That's it.
There's a lot of speak about obviously Brazil and Quebec lithium. Why focus on that right now?
Huge interest, Rob. I mean, the investors are always looking for what is new, what is next. And I mean, what I'm finding is the money. I mean, there's still a lot of money here in Australia, in the Gascoyne region in WA, which is all about what's happening in rare earth. The Pilbara and Karratha in terms of lithium, and that whole region's ignited, obviously, on AZS, GRE, Sabre, MLS, and a few of these other small caps. But what is really, really, sort of new and shiny has been Quebec and what's happened with PMET. I mean, Patriot Metals, all around that region. We're seeing actually a lot of ASX junior explorers make acquisitions, early stage acquisitions, as I said, to go and acquire and pay ridiculous amounts of capital and shares to acquire land holdings in Quebec and Manitoba in Canada. The other big region has been Brazil. I mean, what's happened with Sigma Lithium and Tesla has really ignited that region. We're actually working on a number of Brazil transactions as we speak. Really interesting about, I mean, companies like LRS, SLM, ALV, GMN, that whole region and that whole angle around, or that land package around Sigma has really, really attracted huge amount of interest and huge amount of investor money. And we've seen, Rob, some of these companies up over 500 to 800% in a small amount of period. I mean, and I'm talking about not necessarily even a JORC or a mineral. I mean, it could be, as I said, early stage assets such as rock chips, soil sampling, moving into drilling programs. I mean, it's just absurd what we're seeing down here in Australia, and I suspect that will flow to the Canadian market in a few months down the track.
And is there any sort of commodities that retail investors sort of favour at the moment?
It's all about lithium, and rare earth. I mean, it was, I'd say, copper. I mean, everyone's talking about the supply deficits. What's interesting, gold, for example, had a huge run early in the year to 3,200 Australian dollars, or over $2,200 US dollars per ounce. What we found is that the small cap explorers didn't move. I had a coffee with one of the CEOs today of Talk Energy. They've got a great gold asset. They're drilling in WA, 10, 20, 30 meters at 10, 20, 30 grams. I mean, and the stock's at, below IPO price. I mean, so that just gives you some perspective that the appetite is in essentially two commodities, and that's lithium and rare earth. I'm not saying that won't move to other critical metals. I mean, we've seen niobium, which is really, really interesting, and germanium and other sort of interesting rare earth elements across the board. But the Australian market loves exploration, loves drill holes, loves high grades. And that's really what it comes down to. What I find is that when a company moves into pre-feasibility, feasibility, DFS, PFS, I mean, that lull period essentially doesn't interest the investor. Production obviously is interesting if they can obviously spit out free cash flows and really grow their balance sheet. But what we're finding, the Australian retail investor, to answer your question, are really about lithium and they're really about the rare earth. They're sort of where we're seeing the biggest amount of capital being deployed at the moment.
You just recently had your microcap conference in showcasing 20 plus CEOs, a property and fund management panel as well. What were the key takeaways from that conference?
Yeah, look, it's interesting. I mean, the guys are generally very upbeat about the market. As I said, I mean, last financial year was really, really tricky to attract capital. I mean, they've come out sort of after a really, really tough period, and they're actually feeling really upbeat. What we are seeing is the outlook statements a little bit more bullish. That I mean, everyone's talking about cost pressures, obviously, and inflation and interest rates. but they are looking beyond that. They're looking for different ways to shift and adapt and change. We've had some really, really good uptake. We had over, I think, 120 investors. We had 30 companies. We had a property panel as well, and a fund manager and a market insight panel. Then we had drinks and canapes. And look, it was just overall, Bob, a fantastic event. Lots of interest. So we'll send those of your viewers, obviously, sort of some more information on that. But look, I mean, overall, across the board, everyone's more upbeat about the market heading into FY24. And they believe that as soon as interest rates, we start to get a little bit of that reflection, that interest rate is going to start to fall, inflation starts to fall as well. With it, we are going to see a lot more money coming back into the small cap market. So generally speaking, everyone's a bit more upbeat than what we have seen in the last few months.
Obviously, you started your journey 10 years ago with Peak Asset. What lessons can you share with us and obviously our audience if you were looking to try and launch a private equity or a fund sort of management business?
Yeah, so I think, I mean, the key for everyone is just keep going. I mean, you have to, just like any business, you have to shift and change and adapt and move and you can't sit still. And what I mean by that, if we kept the same business model as we did 8 years ago, we would be out of business. I mean, sitting down portfolio management's great, don't get me wrong, or building essentially an IT framework that people can log in. I mean, it's competitive. You have to be able to provide the end investor something that they can't get access to themselves. And I think obviously, brokerage rates are falling to zero. ECM fees are probably falling to zero. But Rob, as an investor, will always want to get access to a deal that his friend can't get access to make him money, right? And that's the key. The key is to be able to provide investors great level of service, co-investing alongside them the same price, same terms, and making the money for the investor. If we're able to make the end investor money, the business grows. So, I mean, my biggest tip to anyone coming into the market, whether in funds management or portfolio management or equity, hedge fund, property, think about not only yourself, you have to think about the investor. And as long as your end investor is happy with the level of service and he's or she are making a good return, and you're able to provide that end investor something that they can't get access to themselves, I think that will be, the most successful recipe for anyone coming into the industry.
And what sets you apart from other asset management companies?
Look, I mean, it's performance. It comes down to relationships. It comes down to offering these companies that we work with, I'd say, a service beyond capital. I think I touched up on that before. So we've got a distribution, Rob, of 35,000 people that get like our morning, afternoon wrap. We do, similar to you, like a Peak TV interviews with the CEOs. We've had a Peak Microcap conference as well. We will buy on stock on market. We're normally top 1, 2, 3, 4, 5 shareholders of all our portfolio companies. We'll support the company long term. We might take a debt provider off market. We might institutionalize a register through a roadshow. We might introduce them through a joint venture or partner. I mean, so the key for us is, how do we work with these companies long term? And obviously, there are companies down the track that we just get to a stage where it's time to move on, because whether it is we feel that way or they might become a bit too bigger or change to a Goldman Sachs or Macquarie or one of the larger groups. But our job is to provide a great level of service that we co-invest alongside our investors, and then help the companies beyond capital. I think that's really, really important.
How do you see the financial markets within the mining resources space over the sort of next few years?
Yeah, look, it's another really good question. I mean, I think, as I said, money for the end investor wants to make money. What I was highlighting is that once you take into account your interest rates and your cost of inflation, cost of business, I mean, investors really need 10 or 12% returns just to break even, right? So investors essentially are looking for that 15, 20% returns as a minimum. I'm all about diversification as well, Rob. I think having some money in the bank or fixed income or property or domestic equities or high dividend stocks is really, really important. But there's always going to be a percentage of your portfolio looking at 1, 2, 3, 4, 5%, that investors are looking for that additional alpha. And I think that's really important. So I think commodities, as I mentioned to you in Australia, big appetite with what's going on money outside of China and being so close to the hub of Asia Pacific. We are seeing more money than ever going to commodities. I mentioned rare earth and lithium and cobalt and niobium and other rare earth metals. I still think that oil and gas is interesting. Huge discovery just recently. Stocks moved up. Uranium. I mean, with what we're seeing, we're one of the largest holders of a company called T92 that just completed a drilling campaign in the Athabasca in Canada. So we're seeing, I mean, in terms of commodities, oil and gas, uranium, those sort of green investors probably don't want to hear about it, but green hydrogen and I'd say recycling, I mean, it's really come off the boil. I mean, if you're an ESG investor, and I'm an ESG investor as well, however, the returns haven't been there for the last 12 to 18 months. So investors are looking at the end of the day to invest, obviously on one hand to ensure that it is ESG friendly, but also to generate a return, right? So we're always looking for different opportunities. Biotech, medtech is something really interesting. We're actually seeing a bit more money in the last probably few months. We're seeing a bit more money coming back into the biotech, medtech space, which is interesting. But I'm all about diversification. I think that's really, really important. And you always have to back great management teams that have a good, I'd say, skin in the game and ability to execute and deliver shareholder value. I think that's critical.
And lastly, what's the outlook for Peak Asset Management over the sort of next 6 to 12 months?
Yeah, look, I mean, Rob, I think it's all about, for us, growth. I mean, we're looking at different ways to innovate, to change, to adapt. We're in discussions with a few financial planning groups. We're also talking to, I mean, we're also always forming different partnerships with different opportunities, etc. We're looking internationally. How do we basically leverage off our deal flow and our know-how to work more closely with Canadian companies, UK companies, Asian-based businesses? How do we attract more FUM? For us, it's all about, keeping it simple. And what I mean by keeping it simple, look after the investor, co-invest alongside them, make their money, the business grows. So as long as we have that principle, wherever we take us, that's really, really critical for us.
Niv, really appreciate your time. Thank you for coming on and showcasing Peak Asset Management and obviously giving us an update on the financial markets within the mining resources space. And like I said, a few people out there are finding it difficult, and hopefully you've given them some clarity around the actual industry, both in the ASX and obviously other markets around the world. So really appreciate your time. If our audience wants to reach out to you, if they've got any questions, how can they go about doing that? What social media platform channels are you on?
Yeah, Rob, I want to say thank you. It's been really, really a lot of fun. The simplest way to do it is go to our website and you can register to receive our deals or get access to the morning or afternoon wrap. But it's for those at home and listening to the podcast, it's www.peakassetmanagement.com.au. And yeah, look forward to inviting every one of your readers and listeners, and happy to reach out anytime.
Yeah, no worries. We include those in the show notes, so accompanying this, so for easy access, and they can follow your story and maybe get some advice from you. So really appreciate your time. Thank you for listening. Hope you enjoyed that episode. Hope you've taken a lot away from it. Please share this episode amongst our mining community, as well as people outside of the mining community as well. This episode was a little bit more diverse, and some of it was outside the mining industry. So really appreciate your continued support. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.